You're listening to the Mental Money Podcast, the show that shows you how to master your mind to maximize your money. This show is for people who love to watch their bank accounts grow while shifting their relationship to money. Without further ado, let's get these insider insights from today's leading expert. Hi, Jacob. Thank you so much for being here. I greatly appreciate you taking your time to speak to the people that I get to speak to daily and fairly often about how to set your prices appropriately. This is a question that comes up.
Always a joy, Natalie. Yeah.
Thank you. I really, really do appreciate it. This is a question that comes up fairly often. So I'm just going to go ahead and jump right in, and I'm going to ask you off the back, why is setting your price important? Why do we have to think about that before we do anything?
At the highest level, money is energy. That's what it's all about. We're putting energy into our business. We need to make sure that the energy we get back out of the business is, commensurate with what we're putting in. We get that return. But at a fundamental level, you need money to eat, to pay the rent, to pay the school fees, is the example I always use, even though I don't have any kids. You can't pay the school fees with wishing and hope and equity.
Right.
So if you're not pricing yourself appropriately, you're not going to make any money, and your business is going to fail. And that's the simple thing. Making sure you price well and appropriately and get margin creates all those opportunities. But at a fundamental level, if you don't get this right from the beginning, then you are always going to struggle.
Right. Okay. So, all right. So I just want you to touch a little bit on the difference between what something is valued at versus what something costs. Right? Because that's also really important. So I'm pricing my service, for example, let's say I consult, and for to retain me, it costs $2,000. But then how do I quantify its value? What's the difference? How do I set that apart?
It's an excellent question, and the key thing to realize, or the way I like to separate it, price is often objective. Like if I go, well, what's the price of my iPhone? I can look at all of the components that sit within it, and I can say, okay, it costs Apple $400 to make the iPhone. So they could price it at $400 or above. They price it when they go to sell it based on value, and they sell it for $900, $1,000 or more based on the value that they believe that consumers like myself will actually have for that product. And so a lot of that value is around perception. It's subjective. So if you can get your brand, your marketing, if you can demonstrate more confidently your ability to help a client with their problem, they're going to perceive more value up front, even if your underlying costs, which you might use to price something, are going to be much, much less. And so that's one of the challenges for new consultants, for example. They might be coming out of a job where they were making $40 an hour. And so they kind of see that as their price.
Right.
And they go looking to charge $40 an hour instead of going, well, what's the value to this client if I actually help them achieve their outcome? And so for me, it's part of the sales process is often asking the clients, if I come in and help you with this sales project, for example, what's the outcome that you're looking for? What's that going to be? And if that's going to make you an extra $100,000 this year, and I charge you $20,000 for that, is that good value? And of course it is.
Okay, so if I understand correctly, the value is how you frame the cost as far as what it's going to produce for you or the result.
Yes.
Okay.
Factoring in some of the risk. So if I was going to sell you a suitcase, if we had a suitcase in front of us with $1 million in cash, and I went to auction, someone's probably going to pay $999,000 for that because it's $1 million in cash sitting right in front of them. There's clear value. If I promised you that next week I'll send you a suitcase with $1 million in it, you're probably not going to pay $999,000. You're going to take in, how much do I like Jacob? How much do I trust Jacob? A lot of those factors come into the sales process. And that's some of the trickiness with the value, is that you do have to remember the client is often taking a risk that you're going to be able to help them, and they want to make a purchasing decision based on the value they will get and the risk that exists that they may not receive that value.
That's really interesting. Okay, I never thought of it that way. Like, I get. I mean, as you're saying it, I'm like, oh, well, yeah, that makes sense. There's also the possibility of it not working out, and that's also why you want to, I guess, remain competitive too. Is that why?
Yeah, and I think there's definitely a key to pricing, which is around testing.
Okay.
So if you are new into business, if you start your pricing, you'll often work out your pricing almost from the bottom up. You kind of work on yourself. How much do I need to earn, or how much do I want to earn? How many days work does that mean I can do per month? Factoring in, if you're running your own business, you've got all of the time of sales and marketing and administration, accounting. How much time would you have to work? How many clients are you likely to actually get? You can a price that way. But once you start taking it to the market, you've really got a chance to test how that value is being received. You might feel you're incredibly cheap at $2,000, but if nobody's buying, then somewhere in that process, you're doing the wrong thing and it's showing up in people not buying you at that price. If everybody's buying you at that price, and the example I often use, I talk about having beers left at the end of the party. You've got to make sure there's some beer left at the end of the party. If everybody's buying what you're selling at the price you're selling it at, you're probably selling it at too low a price, which means you're costing yourself money.
Got you. Okay. So then, how do you find the sweet spot? Like, do you conduct some market research? Well, in addition to the testing, I'm assuming, right? Like, you test it out, and how long can you afford to test something before it starts to eat up your profit? You know?
It depends a little on your product and your price. If you're selling a consumer good, for example, you're building a widget in a factory in China, you're bringing it over by boat, you're selling it online, you're doing a big marketing campaign. You need to do a lot more market research up front before you can take that to market. When you're consulting or freelancing, you've got a lot more flexibility because the price I give in a sales meeting today may be different to the one I could give next week. And my favorite client example of that was a business I worked with, small little consultant. They had their flagship product that they were selling for $5,000, and they were selling everyone was buying it at $5,000. And so the business owner, she was feeling that maybe a little undervalued, but she wasn't sure where the limit was. And so the challenge I set her was to keep adding $1,000 until somebody said no. So the next time she went out, she pitched it at $6,000. And you would not believe it, $13,500 was when somebody said no.
Wow.
So she had this service that they'd been selling for $5,000, and she could have been selling it for $13,500 all that time. Okay. And that was just very, in a consulting sense, it was just giving each new client a slightly higher price and being confident that that was still good value.
Right. Okay, so Jacob, I'm going to play devil's advocate for a second, right? I am new to business. I want to start consulting. I don't know how to price myself appropriately. I want to test, and I want to do some market research in order to determine what a good price point is. Where do I start?
Start with your peers. And this is often overlooked. There's, good business owners, like exactly what you're doing here, what you and I are doing. We're both consultants, but we're more than happy to open the kimono and share our information.
Right.
And so I talk to probably half a dozen different consultants every month. Most of them are new to business, and they just say, I don't know what I don't know. Can you give me some insight? And I share my prices. I share what I was charging when I started, what I charge now, why I charge that. I'm happy to share. And most good consultants are the same. So you do have this entire network of people who've been there, done that, and are willing to help. So don't overestimate or underestimate the value of going and having a chat to those people to get an understanding of where you might price yourself. The other option is, pick a price and go and find it. And what I mean by that is recognizing that pricing is just part of how you're going to bring in revenue. The more important thing really is the activity that you're doing,
Mm-hmm.
the going out and making sure you're creating a lot of leads or having a lot of conversations, drinking a lot of coffee, kissing a lot of frogs. The
Right.
more of that you're doing, the easier it will be to uncover the people who will pay the price that you're thinking of. And
Okay.
from there, you can work up. A lot of people, yeah, they discount that activity.
That's a great point. Okay, so I'm gonna turn it around to one of my businesses where I'm having a little bit of
Great.
problem with prices, right? So tell me what my
Mm,
problem is here, because I've kind of juggled this struggle in my mind for a while, and I want to
yeah,
solve this problem quick, as you can imagine. Um, so
yeah.
my ideal client is married with children,
Mm-hmm.
and they SEO well SES is typically above $50,000 a year, right? And that could be a single income and double income. I'm gonna go ahead and double that.
Mm,
I tend to attract clients that are not my demographic. I'm not really sure
yeah.
why. Um, so I thought for a while that it was like a marketing issue, but I realized that when I do get my ideal client, that it's fine and my prices are set appropriately. So for I consult with credit. So I do credit counseling here in the States, and I help people eliminate their credit card debt. I help individuals improve their credit scores, and as a result, long term, it saves them a lot more money because of interest, quality of life wise. It helps them being able to apply and approve for and be approved for like cars,
Mm,
homes. So there is value in the service. However, when I speak to someone, and mind you, this is people who are outside of my ideal client, they think it's too
mm.
expensive, which is weird to me. But in one way, it's interesting because I understand that this client already has financial challenges, so I could understand why they may believe that this is costly. But then it actually costs them more long term when they don't resolve the issue. So do I have a marketing issue? Am I framing it incorrectly to the non-ideal clients, or should I just kind of sort them out versus should I adjust my prices to kind of catch more fish?
And some of it comes back to your objectives. The
Right.
quick answer, it sounds to me, is sorting them out a bit
Mm.
more
Okay.
easily and faster.
Right.
You could, if you sort of go, well, if I was 25% less, would I win more of that smaller client, and does the extra volume of work that I achieve by winning more smaller clients, does that make up for it? Do I actually want to do that? My experience across a lot of businesses is that people who say that's too expensive are going to say that's too expensive at almost any price.
Right.
So even if you halved your price, they're probably still going to say that's too expensive. And those, individuals, whether they're an individual talking about their credit card debt, whether they're a small business owner who run that as a sole entrepreneur, the individuals who are super, super price conscious are often the most difficult and least profitable clients to work with.
Okay.
So you embrace that kind of market at your peril because they want to get every last dime out of their investment, as opposed to somebody who's a bit more relaxed financially
Right.
and can see the value in what you're doing and is going to just appreciate the overall value and not nickel and dime you. So, there's certainly the potential to go, well, if I work with more, individuals with a lower income, would that actually make me more money? But it feels like, and my gut feel from experience would be better qualifying through the process so that you're talking to fewer of those individuals. They self-select themselves out,
Um.
would improve the process because your ideal clients are getting that value. You're
Right.
communicating the value and they're seeing it. So save time, talk to fewer non-ideal clients, and then look at the marketing and well, how do I make sure I get in front of the ideal clients, which can be challenging because, whether it's like, I get a lot of business owners who are too small for my fee. So it's a similar problem. In the business world, there are more micro businesses than there are SMBs. As you're talking, there are more people with credit card and finance issues below 50,000 than there are above. So just by demographics, you're going to get more of those non-ideal clients. But yeah, the opportunity is definitely there to keep focusing on those who do get the most value.
Right. Yeah. That's a good point. Problem solved. Honestly, it's like someone told me, like maybe a week or two ago, he said, amateurs convince, and professionals sort. And that really resonated deeply with me because I'm
Wow.
like, yeah, I felt like, and honestly, I kind of got into this, and one of the reasons, not the only, but one of the reasons why I felt like this was such a great industry to get into was because I was like, oh, this is an easy sell. I don't even have to be a salesman. Like,
Yeah, I save you 10,000. It cost you 2,000. This is a no-brainer.
no,
But
you
it's
know,
such an emotional topic.
right. And the thing is, and on top of that, like because I have a history with behavioral science, I also integrated a way to like alter a lot of the spending slash poor credit habits that came with it. So I'm adding like double the value, in my opinion.
Yeah.
You know what I mean? And I'm like, this is okay. This is gonna be easy sell, but here I find myself convincing people that this is good for them, and I didn't like it. Didn't sit well with me. So that's why that question kind of came up, and I remember one day out of frustration I posted on Instagram, which is probably the worst time to post on Instagram. But I was like, you know what, my prices. What did I say? Because my memory is shot. One second. Let me get to Instagram. Like you see how like rage is just so inappropriate. Like
Hmm.
I said it when I was
Well,
mad, and
and,
now I
and you're
can't
not even
remember.
present when you're, yeah.
Yeah. What did I say? I said my prices separate the serious from the curious. And I was just like, I was kind of
Mm.
meditating that morning, and I was like, yeah, I know I'm not gonna sell myself short. There's a lot of work that goes into it. I know I'm producing a good value. I'm not gonna do this. So Jacob, enough about me, right?
Mm.
Let's get to the heart of the matter.
Well, I've got one general thought as well that would apply to a lot of people listening, but possibly also you in this situation.
Mm-hmm.
There's the concept of anchor pricing and
Mm-hmm.
having, multiple products, one of which is that premium quite a good deal higher than your standard product.
Right.
And the purpose of that anchor pricing, people can Google that if they want to read a lot more about the behavioral science behind it, is not many people will buy the top end option.
Right.
However, it anchors in their mind that enormous value that you bring and
Mm-hmm.
makes the standard service look a lot more cost effective and better value.
Right.
So, you may have another product that you add on at the top, which involves kind of weekly personal coaching sessions to dive into it. And this is an extra however many, thousands of dollars. Not many clients are going to buy that. That's not the purpose. It just makes the other options look better and, again, helps with that sorting. I love that about amateurs and professionals. That's wonderful.
Yeah, thank you. And you know what? Honestly, I employed that anchor pricing method, and I realized that a lot of people, like you said, like they're not going to go for the higher premium kind of service. A lot of people fall right in the middle.
Mm.
The
Yes, yeah,
more like,
and that's fairly common. So
right.
make sure the middle is profitable for you.
Of course, no, no, the middle that was intended. Like
Mm.
I kind of
Yeah.
knew that it's almost not that the higher premium price is absurd. It's super value stacked. The client is almost like not involved in the process, which credit related services are very involved, but like they're almost not involved in the entire process, and they give me full liberty to their financial handlings, I guess I would say.
Yeah.
Yeah,
Wow.
but the middle is kind of it's still profitable. However, it's more like, okay, I get it. Like, okay, you're doing a lot of the work, but I still have to have my hands involved in this. And although I want
Mm.
that more hands off approach, like it's still valuable either way. So no, yeah, for sure. Like the middle price was set that way with the intention of it being, okay, this is still great. However,
Perfect.
yeah, it's still profitable too. So that's good. Okay, Jacob. So I have one last question before I let you go. I just want to know,
Mm.
are there any like good tools or resources that people can kind of get their hands on to guide them in the right direction if they wanted to start looking into how to price? Anchor pricing was a great example, and I hope people look into that. Are there any other ideas people can use or things people can look up? Apps, I don't know, what is it?
Yeah. Well, there's a few. The best book on the topic that I've ever read, and he's done a lot of research, so I'll give you the author more than just that specific book. But it's a chap called William Poundstone.
Okay.
And I love the fact that he has pound in his name,
I know.
because that makes sense with the pricing. So look him up. I do a weekly video series. If you Google Blackboard Fridays, head to blackboardfridays.com.au. So that episode 85 of that series, for example, is the one that most people have responded to, engaged to, and that's about 10 or 12 minutes, so it's a bit longer than normal. Some great pricing examples like I've got 5 separate case studies in there and some general principles. So that is a self-plug for a bit of a free resource that I know people are getting value out of.
Okay, good.
The other thing that I learned, I've been coaching businesses since 2006, so I was there at the peak of the last economic cycle, just before the Great Recession, the global financial crisis. That was a great time, side note, to be a consultant, because you just tell people to put their prices up by 10%, and they would, and no one would blink, and everyone would make more money, and I looked like a genius. And then the recession came, and it became harder, and you had to actually add value. So I've been the highs, I've been the lows, I've worked around the world through the recessions and pricing and sales for businesses through that. And so I would definitely encourage every small business owner, whether you're a consultant, a freelancer, whether you've got a team of 10,000, to be making sure you are aware of and reading up on economic cycles, because at the top of an economic cycle, and in some ways, particularly the USA, is currently likely at or near the peak of the current economic cycle, which means that increasing your prices is easier. When there's a downturn, and we're not going to see another Great Recession for another 30 years, so it's not going to be that bad again for a long, long time, but there will be another recession at some point. And if you're, as a business owner, aware of that coming, and you can respond accordingly with your pricing and packaging, which doesn't necessarily mean discounting your price, it may just mean packaging it differently, then you can stay profitable, you can keep that work coming in even through a recession. So, Google economic clock, understand the economic cycle. And a lot of forecasting is, sticking your finger in the wind. But if you've got an idea of some of the basics there, you'll be able to respond faster when things do change.
Right. Oh my gosh, that's such good advice. I appreciate that. I'm going to link everything you just mentioned, the William Poundstone book, your series, the Blackboard Fridays episode. You said 85, right?
Correct.
Okay.
Yes.
I'm going to have your Twitter, your LinkedIn here, your website. I'm going to, no, honestly, because if this is good stuff, why not, right? And then...
And as I said, I get the luxury, the privilege of being able to share this with business owners around the world. So if any businesses do have any questions, by all means, do feel free to reach out to me, and I'm always happy to make the time to answer them.
Thank you so much, Jacob. I greatly appreciate that.
Thank you. Thank you for creating this series, Natalie. I think it's an incredible way to add an enormous amount of value for these questions that you keep receiving. And so thank you for the invitation and the opportunity to be part of contributing to that.
No problem. I have a feeling we'll be talking again soon. So let's
I look forward to it.
No problem. Me too. Have a good one.
You too, Natalie. Bye.
Thank you so much for listening to the Mental Money Podcast. Please go ahead and remember to subscribe, but don't hoard all of this good information for yourself. Share this information with someone that you know could use it, especially if they need a shift in their mindset or someone who would love to have more money. So until we meet again, remember, like Uncle Snoop said, keep your mind on your money and your money on your mind.